Hey guys, welcome to today's video. We're going to look at RRSPs, TFSAs, and the first home savings account. We're going to look at pros and cons between them, which one works for which situation, and just the best scenario for your case. And let's get started with the RRSP, the Registered Retirement Savings Plan. If you don't know, the RRSP is pretty much an investment fund that will essentially be used to fund your retirement. So you may be retiring soon, you may be just starting work, and you might be retiring for many years. Your RRSP is meant for you to invest in, for it to grow over time so that it can fund you when you retire. As you know, the pension in Canada is not enough just to live off of, so they want you to have a reserve as well called your RRSP. Here you get some special tax benefits, which I've been talking about in the past. You get to deduct, you get to save a lot on taxes, okay? Potentially, but depending on your tax bracket, but we're looking at 30 to 50% if you're at the higher end. And there is no good reason for you not to actually use that, especially if you're in that higher 50% bracket. So you contribute 10,000 of your money, goes into your investment fund, and you save $5,000 in taxes otherwise. Okay, so very important use for you to plan. It grows as your contribution room grows as you begin to work. The longer you work, the more your contribution room will grow. If we look at the second one here, your TFSA, this is your tax-free savings account. As you know, the TFSA is a very good tool. You don't have to pay any taxes on anything that's earned in terms of income in this fund. Here you can see in the CRA website, it acts like an investment account. It can hold cash savings and investment that generate free tax-free income. It can be self-directed if you're comfortable managing your own investments, but it doesn't have to be. It can also be a trust by a TFSA issuer. It can have qualified investments such as stocks, bonds, mutual funds, and exchange traded funds. So in this case, if you're a low income earner, you aren't going to save a lot of cash by contributing into your RRSP, this TFSA could be perfect for you. Any income that's earned you won't be paying tax on that. Again, there's some special rules here. You can't be you can't be a day trader. You can't have a lot of multiple transactions. It depends on frequency of use. You can lose that tax-free savings account if you use it too often and if you don't treat it like an investment over time. So the difference here between the RRSP and the TFSA is essentially your situation in terms of how much income you're earning. What makes more sense for you? The last one here is your first home savings account. A really great account here. If you're a first home buyer, you're planning on purchasing a home, in the next few years, this is the right account for you. If you open up an account in your first year, you have a contribution of $8,000, and they are generally deductible and they can reduce your tax. Similarly, like your RRSP, you get a deduction here. The one really good thing about your first home savings account is that once you have enough to pay for a first home, you can withdraw from this account and not pay any tax on that. You will be able to defer that tax essentially by paying back into it. If you pay back into it, you won't have any tax consequence of withdrawing. All right. And, they're quite good about it. They'll give you a 15-year period for you to pay back into your FHSA account, your first home savings account. And then, there's specific rules about deferring when you have to recontribute into the account, pay it back when you withdraw it. But essentially, this is for you if you need cash to pay, for example, the deposit on a first home and you qualify for it. This is the account for you. You'll be able to purchase a home, you'll be able to withdraw it and still have a contribution to your FHSA and still have a tax deduction like your RRSP. Okay, so these are the three accounts that most people use and they're not really sure about which one to use. Again, this was a quick video rundown of them. You can check my other videos for a more detailed answer. Again, remember, if this video helped you, please subscribe to the channel. This channel will have more practical Canadian tax guidance videos that you can learn from a CPA. Remember, this is general tax information, not personalized tax advice.